What's up everybody, Nate here. Buying versus renting a home, an age-old question that has stumped even the most sophisticated of economists for generations. That question has gotten increasingly more complicated in 2023. So today we're gonna put everything out in the open and go over everything you need to know about buying a home versus renting a home in 2023. We're gonna talk about all of the differences and we're going to go over some of the biggest home buying and renting myths that are out there. And before we get into any of that, make sure you do your own due diligence and research before buying a home. I mean, I'm just some random dude on the internet. Don't take my word for it. What makes sense for one family or individual might not make the most sense for someone else. So you need to be as educated as you can on this decision, as it could be one of the biggest in your life. So the first thing I want to talk about here is barriers to entry. Now, when it comes to buying a house versus renting a house, they are completely different in what you actually need to bring to the table. Let's start with buying a home here. So when I talk about barriers of entry, these are the things that are going to be standing in your way from actually buying that house. The biggest thing is going to be the finances. Now, when it comes to buying a house, there is a lot that you need to bring to the table. The first thing you're going to need is a down payment. So this is a small percentage of the total purchase price of the home. It basically gives you a little bit more skin in the game when you front a few $1,000s to buy that home. So you have to bring something to the table, and most places will allow you to bring as low as 3% of the total purchasing price of the home. That means if the house is around $100,000, you will need to put in around $3,000 for your down payment at minimum. Many real estate agents and mortgage brokers like you to go up to at least 20% because it gives you a lot more equity in the home and it makes it a whole lot less risky for you and the bank. It means that you have so much money in that you're probably not going to default on this loan anytime soon. That gives the bank and your real estate agent a lot of confidence. The second thing that you're going to need is closing costs. So these are all of the additional things that now go into the contract of buying a home. So this can be anything from your home inspection to actually getting the title for the house. And it's going to cover your brokerage fees and any real estate fees that come about during the entire process. And usually you'll need to come up with around 2 to 5% more of the purchasing price of the home to cover your buyer closing costs. So again, if the house was $100,000, that could be anywhere between 2 and 5K. The last thing you're going to need is time, because purchasing a home is not a super quick ordeal. I remember when I got a house in 2020, it took weeks to months to actually go through all of the paperwork and to make sure that I could repay the loan. And while it's not a necessity, you might want to have a few $1,000s saved up in an emergency fund in case something goes wrong with the house and you need to fix it. Oh, and if you have an escrow account, which is basically an account for the bank to pay your taxes and insurance on your behalf, then you're going to have to put a little bit of extra funds in that account too, separate from your down payment and your closing costs. Typically, they ask for around a year's worth of taxes and insurance in that account to kind of give it a buffer. It could be thousands of additional dollars as well. So the point here is that the barriers to entry when buying a home are a whole lot higher than when we talk about renting. Not only do you need all of that financial commitment and you need that time commitment, you also have to have a good credit score. Not only that, you need to have a stable income, and the bank is going to go through a rigorous process and request documentation out the wazoo until they get it. They want to make sure that you can pay for this house. Not to mention, if you put down less than 20% in your down payment, then you're most likely going to have to pay something called private mortgage insurance, or PMI. This insurance is not for you, it's for the bank and insures the bank in case you default on your loan. If you don't put at least 20% down on your house, then the bank is going to consider you very risky, and they want to protect themselves in case you are unable to pay that loan back. So that could mean an additional $100 to $200 and maybe even $300 to $400 a month in private mortgage insurance depending on your purchasing price. And guess what? If you don't have this money lying around, then the bank won't go through with it and they'll simply just go to the next person that's lined up to buy that house. When you rent a home, well, the barriers to entry are a whole lot lower, right? Because now you don't have to put up as much to actually get into that home. Not only that, but it doesn't take nearly as much time. Like if you go to rent a house right now, you could potentially get in that house within a week or so, versus buying, it could take weeks to months. Financially, when you rent a home, you typically need just a few things. The first thing you're going to need is a safety deposit. This is something similar to a down payment when you buy a home. The safety deposit is going to protect the landlord in case you make any damages to the property while you're living there. So if you punch a hole in the wall and they need to fix it, then they're going to usually ask for 1 month's of of rent in advance to kind of put down in a retainer to fix any issues. But normally you will get this money back after you move out. So it's not necessarily a down payment, but it is money that you're going to have right away. The other thing that you're going to need is simply your rent. So you're going to have whatever the month's rent is, and that could vary depending on the area. But that's not really much different than a mortgage payment. Typically, it's actually going to be a lot less. And then just like anything, you might want to have insurance, and you might also want to have some emergency savings set aside, but you should be doing that anyway, no matter where you live. Landlords are now also checking incomes to make sure that you make a certain amount of income over what your monthly payment is. So in case you can't make your monthly payments anymore, supposedly you should have enough money in savings because you make so many multiples over what the rent is. And then a lot of landlords are also checking credit scores now as well to make sure that you are a responsible borrower and that you have some sort of history of repaying back debts. But the barrier to entry to renting is extremely low, and you can get into an apartment relatively quickly. You don't have a big time commitment, you don't have a big money commitment. And the big reason why is because when you buy a house, you are essentially buying something that is hundreds of thousands of dollars. This is a big loan. This is a big risk to you and the bank. So the bank wants to make sure that they get it right. Versus renting, well, there isn't that big financial commitment. So in case something doesn't work out, the landlord will just find another tenant. Now, I want to go over a couple myths here as well, because there is a big myth going around when it comes to renting, that renting is simply just a waste of money. Every dollar that you are putting into a monthly payment for your rent is money that could be used to build equity in a house. So you're basically just throwing your rent payments away because they're going towards nothing. Now, let me explain why this is a big myth. So when you are renting a home, you're typically going to spend less overall than what you would when you buy a home. For instance, if you looked at a home and you were thinking about buying or renting it, and buying it was going to be $1,500 a month and renting it is $700 a month, well, then sure, the more payments that you put into that house is going to be used to build equity, but you're also spending a lot less money up front to rent that home right now. What a lot of people get wrong is you can then use the difference between what you would pay in a mortgage and what you are paying in your rent to actually invest in something that is going to make you money. So you might only be spending $700 a month in your rent, but now you can take $500 a month and invest it and make more money to buy things that you want or invest more. That creates an asset, whereas buying a home, it sucks up a lot of your income all at once. And when you really think about this equity situation, it doesn't really mean much. What does equity actually mean? Well, it's the difference between what you have paid in your house and what is currently left on your mortgage. That's really where it stops though, because equity doesn't mean anything unless you stay in that home for the entire period of your mortgage. That means 10, 15, or 30 years. The only thing that equity is good for is taking on something like a home equity loan where you can take on debt based on the amount of equity that you have in your house. Otherwise, your mortgage payments probably aren't getting smaller every month, and unless you stay in that house for 30 years, it doesn't matter how much equity you have, because even if you have 50% equity in that house but decide to sell 10 years before your mortgage is up, well, then it doesn't matter how much equity you had because you just lost it all. You lost it all to put it all into a new house, and that's the game that you play when you get a house. So this equity situation and saying that your money is being thrown away, well, that doesn't really matter. Going off of that, the other big myth that I hear when you talk about renting versus buying is buying makes so much more sense because it's an investment in your future. Well, let me be the first to tell you that buying a home is 100% not an investment. An investment is supposed to make you money. It's not supposed to cost you money over time. All a house does is cost you money. It's not really ever going to make you money unless you rent out your couch or rent it as an Airbnb. But really then it's not your house, it's an investment property, and that is a completely different thing. The house you live in is an investment in your personal life. So you want to buy a house to make memories in. You want to buy a house because you love the area and that you want to grow and make memories in that house with your family. You don't want to buy a house thinking that you're going to make a profit on it down the road. If you buy a house for $150,000 and say, well, this house is an investment, so I'm going to dump $100,000 more into it and make a whole bunch of renovations, and then I can sell it for $250,000. $50K. Well, yeah, because you just added $100,000 worth of value in it, but you still have to pay for that $100,000 worth of value. And at the end of the day, you're going to end up even. Many people buy houses thinking that they're going to make a profit on it, and that might be true. You might be able to make a profit down the road, but it's extremely risky to go into home buying thinking that that's always going to be the case. We definitely saw that that wasn't the case during the 2008 housing market crash. Housing values don't always go up. There is a time and a place where they may actually go down. So your house is not necessarily an investment. So don't try to make a profit off your house. Try to live in it instead. And if you make money down the road, great. If not, then that's okay too. The other thing I want to discuss here when it comes to the biggest differences between buying a home versus renting a home is your actual control. Like I said before, when it comes to buying a home is very expensive up front, but it's also expensive for pretty much the entirety that you own it. If something breaks on your house, then you are responsible for fixing it, whether it's something small or something big. Not only that, but any changes you want to make, taxes and insurance need to be paid every single year. You have to keep up on cutting your grass and doing all of the other maintenance. All of that falls on you. So it is expensive in both time and money, and there's just no way that you're going to eventually recoup that cost if you stay in that house for 30 plus years. But that responsibility is also a huge benefit for a lot of people because you can decide to do whatever you want with your house. If you want to bust a wall down, if you want to completely renovate your entire home, then you can do that. If you want to completely change the landscaping, you can do that. If you want to paint your doors and paint your house, you have that control when you buy. Versus renting, you might not necessarily have that same control. You might be able to change a few different things here and there, but the landlord has ultimate say. You don't really have the same control over your house, but one of the benefits to renting is if something breaks, then you're not really necessarily responsible for it. The landlord is responsible for everything that goes on and breaks in and around the house. So if your AC goes down, then you don't have to pay for your AC to be fixed. The landlord will do that for you. That means you don't have to have as much money in your savings because those emergencies are going to be taken care of by your landlord. So there's definitely a certain pros and cons to that. And finally, what I want to mention when it comes to buying a house in 2023 is the entire landscape of buying a home has changed over the last couple of years. Your home could be a whole lot more expensive now because the Federal Reserve is raising interest rates to lower demand and lower inflation. That affects mortgage interest rates, which means you might end up paying a whole lot more for a house in 2023, which means it might make more sense to rent right now. It really just depends on your own financial situation. If you can afford a home and that's what makes sense for your family, then you should absolutely get one, but you don't want to buy a house that you can't afford just to go into foreclosure later on down the road. Renting is not as evil as many people have made it out to be, and in some cases it makes more sense financially to rent a home. But like I said before, what it ultimately comes down to is being financially educated, and you want to be as financially educated on the entire mortgage process and renting process as you can be, because your landlord and your mortgage broker or your real estate agent is not there to educate you on the process. They're there to make money. Your real estate agent might tell you to get that bigger and better house because it means a bigger commission for them. They might convince you that it's an investment, but only buy it if it makes the right sense for you and your long-term goals. I don't have the answers for you, so you're gonna have to look at your own finances and assess what makes the most sense for you. What makes the most sense for one does not mean that it's going to make the most sense for everyone, so always do your own due diligence and research before you buy anything. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.